Yo, what's good, boys? Another video. This will go up today as well. So this is the third video of the day. Another back testing recap of this morning. Obviously, you know what I've been saying. I'm on just collecting data for the strategy. So I don't really want to record all my forex replay sessions. Obviously I made one this morning, but that was for yesterday's trade. I was just showing you the execution side of things. So yeah, I'm just collecting loads of data on it, and I don't really want to record all of that because I feel like you get bored. I'd want to pinpoint, like, if I backtest and I backtest today's price, then cool, I'll make a video on it. But however, if I do FX replay, then there's no point because it's not relevant to today. So, I mean, personally, I'd rather just watch someone trade today's price than watch someone trade last year's price because today's price is more relevant. But anyways, UJ London session. Me and my boy have been looking at this. He's been getting really good results of it with this strategy. And yeah, I'm just gonna backtest it now. And yeah, so starting off with the daily time frame, as you can see, we have broke above this high, which is bearish. And I almost said bearish then because the 4 hour and the hour are bearish coming into today's price. Obviously, we look at 6 o'clock candle because this is from no, we'd look at price prior to this candle. As you can see, we're bearish on the 4 hour. 1 hour time frame. If we look before London, to ignore that candle, we're bearish again right here. And yeah, so this was a more risky trade that you could have taken as we were in a daily imbalance and we're daily bullish. However, because the 4 hour and the hour is it is in a bearish conditions, obviously we're expecting this retracement from here to here to at least equilibrium. So the plan is to catch a move down. Obviously the 4 hour and the hour are both bearish, and I'd rather both of them were in line. But yeah, so this is just being able to adapt to price. So as you can see, actually I'm going to put that daily imbalance back on so we can see it throughout this back test. So coming in, cool, so we're back now. I just got a phone call. That's why I had to stop recording, so I cut it out. I actually forgot to stop recording, so I've just edited it out. And yeah, right, so coming into this, we have equilibrium formed from this high to this low, and we've also got a 15-minute fair value gap just above equilibrium. So we're in a daily fair value gap, and we've got a fair value gap just above equilibrium. Now, obviously, the whole, it doesn't really matter that it's above equilibrium. The main issue is that we're in a daily imbalance. That is the bigger, not issue, but it's the bit of a stickier conditions than to enter and just go, cool, it can come up here. I'm not really worried too much, but we're literally in a daily imbalance because the daily's bullish. So we need more confluence, is what I'm trying to get at. I'm probably waffling. We need more confluence that this fair value gap is going to give us what we need. So what do I mean by more confluence? What do we usually use to see displacement? We usually use the 1 minute time frame. and the 1 minute time frame would have entered straight on that candle. But no, we're going to enter on, that is the wrong way, a 5 minute candle out, because one, it's just above equilibrium, and two, we're in a daily imbalance. So we would have entered on this candle right there. Bang. Stop loss can now go at 50% of the fair value gap, as it's a 5 minute candle out instead of a 1 minute candle out. If it was a 1 minute candle in and out, it's still got the potential to go back up and then come back down. So yeah, 5 minute candle out, and that means it'd be 136, and as you can see, pinpoint, that gets hit. But yeah, that's the biggest risk factor, is that we're in a daily imbalance, which is never really that fun, especially if the daily's bullish. But as you can see, 50% would have been here, would have been break even from here, and then it never come back down, and it just hit take profit perfectly. So it had a perfect fair value gap touch and a perfect exit. So yeah, that was UJ London session. I just wanted to go and have a look at it, just because my guy's been showing me a lot of results of it, and I was like, yeah, go on then, let me get a slice of that cake. And as you can see, obviously, if this candle didn't get hit, you would have got stopped at break even. However, this fair value gap still held. I mean, even coming into New York, obviously we wouldn't have even traded in New York. There was news, but yeah, and you can even see that because my camera's on there. But yeah, just a short video, just going over this trade, just showing you again. This move down, even in a daily imbalance, and that's not me going, right, you need to trade in daily imbalances, because it's not. That's why I used a higher confluence entry to get involved. But yeah, as you can see, price was just sort of floating around. It never would have fully stopped us out. Obviously, we got stopped at break even if that didn't get hit precisely. I mean, even if you entered on a 1 minute candle out, you would have got this entry right there. Could have had stops covering the fair value gap now. What you would have had to, you couldn't have put at 50%, and that would be 13 pips. And then, yeah, like I said, break even would have been here. So here, and you wouldn't got stopped out. But yeah, personally, I would have rather a 5 minute candle out, just because we're in a daily imbalance. So the move was still valid. 4 hour and hourly was still in line with our sell bias, but we just wanted higher conf. So this is either the riskier confluence or the more higher confluence. So yeah, hopefully you guys enjoyed that. Hopefully you learned something, and I'll see you guys in a bit. Peace.